Money makes the world go round, the world go round. Money makes the world go round and round and round and round. Well, hello. It's a little bit of an early coffee with Scruff. Well, let's have a look.
Matron, take them away.
And a warm welcome to one and all. If it's your first time here, I'm the big fella Scruff. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way, or at least inspire you along the way, because that is my ultimate goal. Just to inspire you and show you that trading isn't as difficult as you think. So if you do like that and you want to see it in the real world, do hit the subscribe button. Genuinely helps and motivates me to do more. And then if you get value, smash the like. Can't be any fairer than that, can I? What's coffee with Scruff? Well, coffee with Scruff is exactly what it says it is, because I'm Scruff. So it's coffee with me. And me coffee. This thing here. Because we all know Scruffy likes a coffee, and he probably drinks way too much of it. But, believe it or not, the coffee cup can help you as a trader. And why? Because it can slow you down. Why not try this little trick? Every time you see a setup coming into play, don't take it. Go put the kettle on. And then come back when the next candle's closed and see if you still like the trade. Because often what happens is the ego takes over and you want to be in the trade. You're desperate to be in the trade. You have to press the button. When that's actually the worst thing you could do. Because you probably haven't done your homework. You haven't laid the chart out. You don't even know what you're looking for. You're just seeing the glitz and you want to be, well, the next Warren Buffett or Wolf of Wall Street, or maybe you've seen a dickhead on Instagram, or what you call, or what I call, Land of Make-Believe, because it's full of dickheads. And why? Because they're selling you a dream that doesn't exist. So when you look at this profile, you'll probably be going, hold on a second here, where's the millions? This isn't right. You're right, it's not. I want to give you the update of my small account. It's the last day of the month. I normally do it on the last Saturday of the month, but I'm going on my hollybobs tomorrow. Off on a little bit of a weeno, because I might have the odd tipple or two or three, or to the point where I pass out. No, I'm going on a cruise tomorrow. And anybody who follows the channel sees I go on holiday quite a lot. And why? Well, one, I burn out because, believe it or not, YouTube can be very draining because it takes up a lot of time and energy. And you just need the break. But trading is the same. It's incredibly pressurizing. You need the break. So that's what I do. So what I'm going to do is I'm going to update the small account. You've watched me build over this last year. Now we're way ahead of where we should be. I started it with 118 quid in December, and it was on a share account, just shares. And it grew up, and then in April, it got big enough to transfer the money over into like a Forex account. So I could potentially day trade it. So I've still got the share account ticking along, and it was a means to an end. But this is now built up substantially. And my goal was to get it to £1,000, and then £1,000 will become my benchmark. So I didn't take any money out of it at all. I just kept on compounding and building and building and building. And I'll show you in just a second. Till it gets to £1,000. And then at the end of every month, which it is now, I'll take half of the profit out. Now I set myself a benchmark of 1,200 and I missed it. And I'm gutted because I missed it by just a couple of quid. But just means in September, I'll have a little bit of a bigger payout. And what I'm doing with that money, as what I'm doing with one of the smaller accounts that I set up with the 5%ers, and I'll kind of touch on that as well, is I'm drawing around £500 a month out of the 5%ers account. And I'm putting that into an investment account. And where did that come about? Well, it's because I do use index trackers for my swing trades. In other words, I do a swing trade. You saw me over the last 2 years get enough to buy the house that I'm sitting in. And it's also paid for a car that I drive. It's not a new car, it's a second-hand car, don't get excited. And it's not a flash house, but it's my house. It's paid for outright. And it's also paying for the renovations that's going on. So you'll see the office getting built and various other bits and pieces. So... let's have a look at this journey. So if I flick this over, I'll come back to this in a second. This is the account we want to look at. Now, here we are here. I need to update the fees on this because it's like a couple of pence out. In fact, I'll do it now. What is it? I do everything live, by the way, boys and girls. I don't cherry pick anything because I'm not like that. I just sort of short. I mean, when you saw me on any chart, it's never cherry picked. What you see is what you get. There we go. Right, so that's updated. It's just the overnight interest charges. So this was this month. I will, and I know I've said it before, but I will be changing this over onto my other spreadsheet because I prefer it. But this is served its purpose. What it's actually showing you is we've had 60 positions across this month. 57 of them were closed out in profit with a 95% rounded win rate. I'm really pleased with that. Now, because we've been doing quite well, I've been able to increase the bid sizes. Now, we're up to about £1.16 per bid. Yet when we first started, we were at 10 and 20p, you know, so we've built it up. And we've got a half decent return month on month. So I'm happy. But if I flip this over, you'll kind of see where we are. That was the start in April because my tax year runs April to April, and as you can see, it's moved up reasonably well. I'm over the moon with this growth, and I can't stress how happy I am. And it's a couple of quid here, a couple of quid there, but it's more than a bank will give you. And that's your first job, outperform the bank. So if I come down here and you'll see this is what I've done today. It's not a great deal, but it's 8 quid, which is substantial to the size of the account. And I'm going to take it a little bit further. So you can come down into this and sort of see what's going on. This is the bit that I want. And there's your growth over the last sort of month or so. You can see it's gathering pace quite well. And if I pull it down, there's your win factors. Okay, this ain't bad. This is pretty darn good. So what I've done with that is everything that I'm earning is going to come in to this. All right. Now this is an investment index tracker, and I'm using my tax-free allowances, but you can also have a general account if you're overseas and use that, and also a little bit of pension as well. So it's like a supplementary pension. Now, also, if you bear with me, I'll just switch this on. Give me a second. Okay, I want to show you this because I've started to take out my monies. Now, I take approximately, oh, what the hell have I done with that? Have I broke it? Oh, there it is. Say, fell off. Right, there we are. I take out 750 every month, which equates to about 500 quid. Now, if I come down here, you'll see how the 5%ers pay me. And then I'll tell you a little bit about who the 5%ers are. So started that today. And there you go. Money after money after money after money after money. All the time from a small account. Now, what I've done with that is, if you can imagine, April, May, June, July, August, £500 out of each, which is what I've done. It's £2.5 grand. So I took it out of the savings account and dumped it in here. Just to show you how this works. Now I'm going to run this slightly different because it's already, you saw me do a quick update on this about a week ago. Wasn't very long, and it's already growing. You know, it's sitting 36 quid in. So if I look at the investments that I've put into it, there they are there. Now these are long-term investments. They'll go in and they'll just job along. They'll work their way through it. And I'm quite happy with that. But I've also set up, because I know I'm going to be paying regular money into this. So if I put on transactions, you'll see that I've started putting in regular payments. You know, some I'm going to cancel out. There you are. Regular payments are now set in. Just to build up. And then I can dump it into other portfolios, everything. It's a good platform. But how do you pick your funds? Because there's hundreds of them. If we go, what do they offer? And you sort of go, well, let's have a look. Full list. And it should show you how many funds there is and how you work it out. Well, there you go. There's 86 funds. It's quite a lot to work your head around it. But fortunately, I'm a bit of a geek. Sat and worked it out. And all I need to do is update this every 6 months or so. Whenever they do an update, I can track the last 5 years of all of the funds. So there you are. There's all the funds. Tells me the risk factor, how many years they've won out of 5 out of all the 86. And then up here it pulls out what's going to happen with it. So it's basically the top 10 funds that I'd be interested in. And then I have a certain criteria that I look for as to whether or not I want to put any money into it. And it'll tell me to put money into it. And I'm really interested in the top 5. So I'll build it up to 5. And then I'll keep half an eye on the other 5 to see if they're gathering. And because my benchmark is about 50%, 10% every year sort of thing. Now, what I can also do is this. I can have an allocation for each one of the funds. Now, the best performing funds, which has been for years, is the S&P 500, this one here. So what I'm going to do is give it half of the investment. Now, let's just say I've got a cash lump sum of £1,000. £1,000. It'll automatically tell me exactly how much I want to equate to it. Now, I could split this all up and sort of go, well, I only want to put 40% in there, 5%, 5%, 5%. it'll tell me exactly how much to put in. And it's all set and forget. Now, one of the beauties of this, though, and one of the reasons why I've picked Vanguard is for this reason. You'll kind of see I'm also working it on this side. I need to update this. I'm just figuring this out where I can key in what I've done, current value, and it'll actually tell me the worth of the portfolio. And again, it'll tell me which one of the pots is working and which ones isn't. So it'll help me. All right, so that's another part of this. Now, let me just show you something as to what I'm looking at. I should be able to go back to platform. Yeah. Right. If I come here and I go Vanguard, there is the Vanguard ETF. So not only can I see what's going on the Vanguard platform, because the one thing I don't want to do is this. You buy your investments weekly, and it runs very well, tops out, but then gives away. I mean, let's have a look, see how much it did give away. Good old fib. So we say we started down there, we got up there. Well, if you started here and you built a fund to the top of this, and then it collapsed like what it did here over that period of time, well, it's lost 70% of its value across that period. And then you'd have to wait to buy it back up. So what's the big boy going to do? Well, remember, these are weekly, monthly charts, so they do take a long time to play out. And we are in this for the long term. Well, I can do the same as I do when I trade. I know this is running up, and the chances are it's going to come up to here. So it's the time horizon. Let's just have a little look, see what trend line is. So we can see the trend line. There's your time horizon, roughly. It's going to get up to there, maybe February next year, February, March next year. So I'll invest heavily in this till February, March next year. And then at that point here, I'll just watch what goes on. What I might actually do is sell half of the investment and put it into another fund that is growing very well and see what happens. And if that half starts coming down, fine. I've got the other half put somewhere else. And then I want it to come down because then I can buy back into it and then repeat the process. So I've had half of it out. This half comes down. Yes, it's going to lose value, but I'm going to add into it each time to get a better price, more units, and then push up. So I only have to look at this maybe once a month. Easy way to invest, easy way. Or even once a week, look at it. Simple. So what's this got to do with the price of bread, and why am I showing you this? Well, it's very simple. Most traders start with little money. But think of it as your apprenticeship. Yes, it's little money, but you only earn little money when you're an apprentice. You only get it like a little tiny salary. But you got a skill set. And then as your skill set got better, you got a pay rise. And then as you got a pay rise, you got more responsibility, which give you a pay rise. But then once you've built your way to the top, you might have the pressures, but you're not doing the hard labor anymore because you've done it. You're now just using the knowledge that you've gained. That's what I'm doing here. I've done 19 years of trading, and I built up pots that one pays for a car, one pays for the house, one's paying for a pension, and then I do little accounts and little challenges and one thing and another, and I get holidays out of it, which you see regular. And now I want investments, you know, alongside what I already do. So again, I'm just resting on my laurels and using my skill set. So that little acorn that you saw me start 8 months ago is now helping fund my retirement, because I'll never take that out. That's what that's for. It's just to build up over the next 10, 15 years. So when I've had enough, I've got a decent pot that I can have a jolly old time of things with. And I'll keep building into it and building it up. And if you want to see the investment side grow alongside the small account, just shout. Or if you just want to see the investment, just shout. Doesn't really matter. Up to you. But as advice, don't be worried about small accounts. Small accounts are wonderful. You know, say there's good things in little bundles. There is. Because what it'll teach you is patience. It'll teach you respect of the chart. Because if you haven't got any respect of the chart, you'll bloat. And you'll always bloat. And I constantly get the chat from people sort of going, well, I'm not making any money. Doesn't matter. When you were an apprentice trying to be a joiner, a plumber, a bricklayer, you still weren't making any money. But you were earning a skill set that'll set you up for the rest of your life. That is what trading a small account is. It's gaining a skill set that will set you up for the rest of your life. Don't let the desire to trade outweigh the reason. Always remember that. Just because you're in front of the screen doesn't mean to say you have to press the button. If you get it wrong, doesn't matter. You got it wrong. Period. Live with it. You know, if you have one loss, don't change what your system is. It's stupid. You go into the treadmill of terror. And the treadmill of terror is exactly what it is. You're constantly on a treadmill going round and round in circles. Oh, this strategy's great. I think I'll do this for a while. Oh, it's lost. Oh, I'm going to do this strategy now. Oh, this is great. Oh, it's lost. I'm going to do this one now. Oh, it's lost. So I'm going to do this one. And then you're back to square one. Whereas if you're stuck with the original strategy, even if it's just a moving average cross strategy, but you understand what its pain thresholds are and what its pleasure points are, because you've got to target appropriately and put your stops in appropriately as well. Work out what the win rate is and then be happy with the result. You'll probably find you do all right. But every time you lose, you chop and change your style. You won't be. You'll constantly be spinning the wheels. I lose all the time, but I accept it. But I'm also disciplined that if I see it's going wrong, I'll kill it. You know, very, very rarely it hits my stop. Very rare. I know how to average into it and I know how to average out of it. And that's a skill in itself. But that's why we come back to your apprenticeship. You learn this through experience. Then you rest on your laurels or your skill set because you've done the hard graft. I hope that makes sense. The idea of this video was literally to inspire you and just to highlight that you can take 100 into over 1,000. We've done that now, so that sort of phase of videos and one thing's kind of finished. And I'll revisit it from time to time. And I do that. I'll sort of set the stall out on something. And once I've completed it, I put it to one side. But I still trade every day. You see me trade every day. I've started doing morning calls. I do them every morning anyway for the squad because I make my strength sheet and that's what I base my trades off. But that's on a reward basis and it's normally on likes. The more likes that goes in, I'll do it the next day public. If there's no interest in it, I just don't bother because I'd rather have an extra half hour in bed. So there we go, guys. So if you've enjoyed the video and you're curious about trading, do drop me a line, do drop a comment. I answer every single one of them. And as always, trade well, keep your risk managed, invest well, but above all, do what you love and the money will follow. See you all in the next one.